My colleagues and I remain squarely focused on.
Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks reached fresh record highs on Friday amid a record-setting rally as the US and China advanced trade talks and the Magnificent Seven continued to climb. And that's what we saw today. The Mag 7 outperforming and just some of the bigger names outperforming in every sector. For example, Google Income Services was up 1.15%. It helped the sector move along with Netflix, which was also up 1.5%. You can see a Tesla was up 2.21%, Apple up 3.2%, Microsoft up 1.8%, Nvidia gained, and some of the bigger names in each sector, Visa, JP Morgan, they were the best performers in financials, GE for industrials, and that was kind of it. Everything else was very, very mixed. You could see, look, some sectors won, some sectors lost. We definitely did get an end of day dump, sort of like a risk-off move into the weekend, but net, the S&P 500 was still up 0.22% on the day, and again, led by stuff like technology, utilities, comm services, consumer discretionary, XLI, XLF. These are sectors that'll definitely benefit from lower rates. And then we did see a bit of a pullback in some names like energy, real estate, staples, quintessential defensive sectors, but some cyclicals as well. Real estate definitely is a cyclical sector. It does have some defensive characteristics, but all in all, there were winners, there were losers. Such goes the market. It was definitely a day for large cap. Core and growth outperformed the broad market. We did see mid caps take it on the chin and small caps even more so, especially in the value and core component of the market. But because large caps gained, you saw the overall US market gain as a result. And there was a lot of market moving news today. I think the biggest news came from Donald Trump. He put out this tweet. He said that his meeting with Xi Jinping of China amidst US trade talks in Madrid was very productive. He will be visiting China next year. Xi will also be visiting the US. The TikTok deal has been approved, and there was no other updates on tariffs, trade, or Nvidia, but it's really good to see both leaders are talking and progress is being made. Other market-moving events was the Senate failed to advance a bill to fund the government as the shutdown looms. In a vote on Capitol Hill on Friday, lawmakers rejected a short-term spending bill that aimed to avoid a government shutdown at the end of the month. The vote was 44 in favor and 48 against, short of the 60 required, and sending the GOP leaders back to the drawing board. So this is not a crazy risk, but it is still a risk that's out there. I think we're going to see some form of a proposal. The Democrats definitely don't want the government shutting down because then Trump has immense power to just cut as many jobs as he wants. So I think we're definitely going to get a resolution to this. They're just playing hardball for the moment. And then other news that we got, the Bank of Japan kept interest rates on hold on Friday in a week where the Fed actually cut them and several other central banks actually cut them as well. The BOJ said it will also start offloading its portfolio of exchange traded funds, a sign of confidence in the economy despite global trade tumult. And then looking at some of the market movers here today, Apple was up 3.2%. After a successful launch of its new iPhone 17 lineup, orders are looking very, very strong across the world in Europe, US, Australia, Russia, Asia, through and through. And we saw significant price increases from many analysts, most notably JP Morgan. The stock was up in a big way. I think there's price targets even reaching the $300 mark here for Apple. We'll see if they materialize. I like the iPhone 17 and me and my wife got one. Oklo, nuclear stocks were up in a very big way. Oklo was up 28% and I believe up 1,500% in the last year. And this was just a rally based on optimism in the sector. There wasn't even that much news that came about. A lot of euphoric stuff happening. And then CoreWeave shares jumped 2.86% after Loop Capital initiated coverage of the stock with a buy rating, and I quote, "There remains a material underappreciation for how committed the hyperscalers and major AI labs are to pushing the innovation of AI forward." And as a result, CoreWeave was up and this stock was $80 just 3 weeks ago. So absolutely insane moves we're seeing right here in the market. And then for everything we saw today, there was 4,000 decliners, 2,300 advances. We saw net inflows in the Nasdaq and the New York Stock Exchange. The S&P 500 gaining 0.5 percentage point, and market momentum continues to remain solid. The 5-day to the 20-day things are looking bullish and you definitely don't want to fight this trend. Now guys, looking at the week that just was over the last 5 days, we saw actually some major outperformance here from the large caps as well as small caps. So generally just high beta outperformance, but we just saw strong performance here in the S&P 500 gold as well, both up in excess of 1%. Bitcoin, however, was down 1.52%, and then mid caps was also down 0.2%. You could see here a lot of volatility after the FOMC rate cut decision. We really did see the RTY move, but we saw all assets move respectively. However, a very, very solid week, and probably more solid weeks like these to come. Definitely expect more of the same as we enter this rate cutting cycle. When you look year to date, this is absolutely insane. Look at gold up 40% on the year, IBIT up 23%. That's Bitcoin. Gold really outperforming. The Nasdaq up 17.2% after everything that stocks had to deal with this year. This is where we are, guys. A 17% plus year for the Nasdaq. The S&P 500 up 13%, and even the RTY, the gains are starting to look respectable, up 9.8% for the year, and mid caps up 6.2%. So definitely a catch up move ahead, especially if we do get, another 75 basis points worth of rate cuts. But when we dive more granularly into what we did on Friday, we can see that the S&P 500 was up 0.5 percentage point. The Nasdaq 100 outperformed, and that was kind of it. The Russell 2000, the RSP mid caps, and even the S&P 600 small caps were all down in actually a very big way, all down in excess of 1.5%, except for the equal weighted S&P 500 that was only down 0.17%. Now scrolling down after the market closed, you can actually see the futures did actually put up a respectable after hours price. So we may actually open Monday just a little bit green if these gains hold. So the momentum definitely continuing, except here in the Russell 2000. We had a mixed day internationally with European stocks falling, China stocks falling, and then Israeli stocks and Indian stocks are gaining as a result. You can see that crypto up slightly green here, but we'll talk about it because cryptocurrency is open on the weekend. This is just the Sunday price in Australian time. And then on the macro side, on Friday, we actually saw the 2-year and 10-year yield rise. And again, this is owing to the fact that the market wanted 100 basis points worth of rate cuts from the September economic projections. We only got 75, so the market is repricing that risk, and that's why we're seeing the 2-year and 10-year yield rise ever so slightly. But that is after both these assets, or I should say these structures, these market structures fell coming into that rate cut. Dollar did gain ever so slightly. TLT was down, and then gold and silver, probably the best performing assets here today. Gold up 1%, silver up 2.76%. And let's look at the S&P 500. This is the weekly chart, and when we zoom out, we see a clear trend of higher highs, higher lows into a weekly all-time high. This is a weekly all-time high for the S&P 500, as you can see right here at the top end of the call wall range. The same is true for the Nasdaq 100. That is an all-time high. And the same is true for the Russell 2000. So yes, this is a weekly closing all-time high. However, not an aggregate closing all-time high, because you can actually see, however, we did go ahead and break above that high intra week. Very, very interesting. When we look at the RSP, right, very similar situation. Weekly close, not quite a weekly closing all-time high, but we did get an intra-week all-time high. When you look at mid-caps, still a bit to go. When we look at mid-cap, still a bit to go here for the mid-cap indices. But all in all, a lot of these indices are looking very, very strong. But let's go back to the S&P 500. Let's go on the daily chart. And this looks exceptionally strong, especially coming off these tariff tantrum lows. We put in a low right here. This is exactly where Donald Trump said to buy stocks, as well as myself. I was saying buy the dip right here. The market has had a very, very strong move off these lows. And you could see right here, guys, extremely strong into an all-time weekly closing high. The S&P 500 has never looked better. It's never been higher. And we close at 6664. And if you go to the very first video of this year on my channel, I outline my end of year projections. And for the S&P 500, mine was 6669. Now, I'm not going to change that prediction. I think we're roughly going to finish at around this time right here, but that doesn't mean we can't go ahead and actually reach a higher level in the S&P 500. We can definitely touch 7,000, and I can definitely be wrong. And I would love to be wrong and for us to go significantly higher. That being said, it's absolutely crazy to see what we've done. And I do think any dips we do get in this market will be short-term buying opportunities. If we get a pullback to the gamma flip zone right here, the 64.79 area, buy that dip. If we get a dip to the 63.42 area, buy that dip. In the Nasdaq 100, that would look like the 23.500 area. It would look like the 22.663 area. If we get pullbacks to these areas, right, it does not matter. You want to be long, buy these dips, looking for us to go higher, because we do know that earnings growth and margin expansion will continue into the end of 2025, into 2026, despite incredible comps. And this means these stocks definitely will go higher. I think these stocks are certainly going to go higher. And ultimately, any dips we do get, you just want to go ahead and buy those dips. Guys, we're in a risk-on environment. We hit all-time highs in a lot of these indices, or we're approaching all-time highs, 52-week highs in some of them. And ultimately, you do not want to fight the trend. The trend is ultimately up. Momentum is to the upside. And I think dips will be very, very short-lived. In all of these indices, you do want to go ahead and buy them. Now, Bitcoin hasn't been acting super well. You can see we did actually put in a move right here, a bottom. However, we are forming some form of an island top right here. If this does continue to be a top, it will actually be a lower high relative to this high right here. And that is something that means we would actually have a move down to the 109 area. If we can find support right here, ultimately would be a higher low. That's what we're looking for. But we'll see where Bitcoin resolves. Ultimately, Bitcoin is extremely sensitive to liquidity. We know liquidity is going to the upside, and I do think we probably resolve higher. And ultimately, all of this is just noise and a dip buying opportunity for an end of year price target of about 140,000. Ethereum is above the 4,000 mark. This is a very, very key level. It also does look like we're forming somewhat of a higher low right here relative to this low. And you can see that's all we've done over the last year is just putting higher lows here for Ethereum relative to where all of these dots are. And again, I do think we go ahead, hit these all-time highs, which we did reach, and then we continue the move to the upside in Ethereum. I'm actually more bullish on Ethereum this year than Bitcoin, but perpetually I'm bullish. And you can see there hasn't been much movement this weekend, not much at all here for Ethereum, barely moving. When we look at Bitcoin this weekend, barely moving as well. So where we closed on Friday is roughly where we are today, which is at the 115,000 mark, and Ethereum at the 4,500 mark right here. Now, guys, two stocks that I'm looking to buy this week into any type of weakness we may get. One of them is Zeta Holdings for a very strong trade. You can see that we have just broken above the $20 area, and that means we can open up the $26 area. I think selling like $20 or $21 cash secured puts in this name potentially getting filled. You can see 26 in very, very short order. Another name I'm looking at is Applied Digital. Guys, if we do get a pullback to the $17 area right here, I think this is going to be a strong support zone, and I do think we're going to see $25 ahead of its earnings. AI infrastructure plays are just ripping right now, and I do think this name definitely has higher to go as more contracts come to hand for Applied Digital. So those are two names I'll be looking to enter into this week for short-term moves to the upside. Guys, and diving into sentiment, this is the Fear and Greed Index, and the market continues to remain at this greed zone right here as we trade at all-time highs. Given the market momentum, price action, and rate cuts, you think we'd be in extreme greed. That is simply not the case. We are just in greed. We were just in neutral at the start of last week, and here we are right now in the greed. So generally speaking, guys, we do actually want to, hold and take money off the table as we get into this extreme greed zone. We want to be persistent buyers in fear and extreme fear. So this is really the position where, if you do find undervalued plays, especially in the broader market, you definitely want to add to those. But, in your larger cap names, in your massive ETF holdings, this is really just a place where you want to hold and just ride the up momentum, because at the end of the day, the fundamentals continue to remain sound. When we look at S&P 500 earnings growth, and this is the latest number with 498 S&P 500 companies have reported. The official number, it looks like for Q2 earnings before we go into Q3 earnings, is for 13.4% earnings growth, 6.4% revenue growth. And if you exclude the energy sector, you're looking at about 15.3% earnings growth, which is absolutely insane. Margins are outperforming, and we're definitely besting the estimates coming into this earnings season of 3.8 and 5.2%. Absolutely smash those estimates, and this is why you ultimately want to buy the dip. But where does this leave us with valuation? Looking ahead, this is the next 12-month PE valuations for the Nasdaq 100. As you can see right here, the Russell 2000, the S&P 500, the equal-weighted S&P 500, and the S&P 400 midcap. And without a shadow of a doubt, the best value in the market right now is definitely in the broader market, the equal-weighted S&P 500 and the S&P 500 midcap. trading at mid-teens multiples, as you can see right here, which is not expensive, and it's roughly inside the 75th to 25th percentile range, or in other words, inside the median range. In fact, the S&P 400 midcap is trading slightly above its 20-year median. This is not an expensive market in midcaps in the broader market. Looking a little bit pricey when you look at stuff like the Nasdaq 100 and the S&P 500, the Russell 2000 trading just at the top end of its range at 25 times. But all in all, there's definitely value to be had in this market, and this is where we can definitely see outperformance looking to the end of the year as we get rate cuts. But the truth of the matter is we may just see outperformance in general, because once we get Fed rate cuts and we don't get a recession vis-a-vis a soft landing, normally what happens 12 months later is stocks return about 18%. Absolutely insane. Now, if we get a recession, we can actually see some pretty brutal price action, but I don't consider that to be the base case, because when we look at the macro, there's just no signs of recession. Atlanta Fed's GDP now for Q3. We also get the final GDP revision estimate for data. We'll talk about that a little bit later on, but GDP estimates are looking at about 3.2% right now. Very, very solid stuff. However, there is some strain in the overall economy, particularly in the labor market. ADP payroll data show that employee turnover reached its lowest level in July since the data began tracking in 2017. The decline in employee turnover suggests a cooling labor market where fewer workers are switching jobs, likely due to reduced confidence or fewer opportunities. This supports upcoming rate cuts as it points to easing wage pressures and lower inflation risks. However, it may also reflect slowing economic momentum, which rate cuts aim to counter. And we do know we just got the 25 basis point rate cut last week. And also, when we look at federal employment tax receipts, the data has been pretty solid throughout this entire year. When you look at January, February, March, April, May, all in excess of 5% year-over-year growth. And then we come to September, we can finally see a slowing. Halfway through September, payroll taxes do seem to be slowing, and it remains to be seen if this is just a wobble or something more ominous. You also do have to understand that the comp for September 2025 was very, very strong, and we are facing very, very strong comps. So we can see this slowing down, but there's also an ominous sign that we are seeing weakness in the labor market vis-a-vis rate cuts. That's why we're getting them. Looking at data for the rest of the week, Tuesday, Jerome Powell's coming out and giving us a speech, even though we got one last week. And then on Thursday, we get the durable goods orders. As you can see right here, the consensus is for negative 0.4. We also get the GDP growth rate quarter over quarter, the final figure. We're looking for a 3.3% right there. Then we get existing home sales looking for 3.98 million. And then we get inflation data on Friday, PCE inflation, which is the Fed's preferred gauge of inflation. And for a month-over-month figure, we're looking at 0.2%. And then personal income, personal spending 0.3 and 0.5%. respectively. Looking at earnings, Tuesday before the open, we get AutoZone. After the close, we get Microns. This is going to be a pretty important day here. Then Wednesday, not much is happening. Cintas Group is reporting. Then on Thursday, we get Accenture. They're reporting before the open, and then Costco. Nothing on Friday of note. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.